To expand and grow your business, it is of utmost importance to always measure its profitability periodically to maintain the financial health of the business. The main measurement metric of the business is its profit. With these frequent checks, a business can be saved from falling abruptly. As a good business owner, there are key areas that you should always pay utmost attention in order to help improve your business. Before even a business idea is conceived, the main reason why anyone will want to start a business is basically to make a profit, because a business that isn't making a profit can't be sustained, and before long it will die naturally. It is pertinent to always make profits, and not just make profits, but ascertain that the profit being made is enough to advance the business. When you need to excel and grow our business, there are key areas we need to carefully watch out and give a periodic measure to determine how successful you have been in those areas. This will make us generate metrics, stats, and even performance indicators to help us measure these key areas of our business effectively. These measurements will help you gather great information about your business and key in improvement where necessary. As a good business owner, there are key areas that you should always pay utmost attention in order to help improve your business. These key areas might include This is the measure of the extent by which your business has the cash to meet immediate and short-term obligations. To measure this, you should confirm if your current assets can readily take care of your current liability. This is a means of measuring how your business can reduce its cost and improve its competitiveness. You can measure this by checking if your business can reduce the cost of production and output and still have quality outputs which can compete healthfully and favorably with your competitors in the industry. This is the measure of how products and services supplied by a company meet and even surpasses customer expectation. This is asking, has my business been fair to all my customers and keeping them happy? This is the measure of a company's performance. In simple terms, it is the net profit, total amount of profit excluding every production cost incurred such as logistics. Having listed all these, you will be looking specifically at how to measure your business profitability. One thing is to find out good financial ways to always ascertain that one is making a profit in business. But the background of it all is to make sure that things were put in place to generate profit for the business in the first place. Making a profit in business takes conscious efforts, and profitability strategies must be employed by the company to be able to make the needed profit, which will cover all direct and indirect expenses and overhead costs of the company, and the company can have some reserves too. Some of the factors should be considered and worked on diligently to be able to have a good profit margin during a trading year. I believe this is the first area which you should set right if you need a valuable and profitable business. An accurate pricing analysis should be employed by you to determine the right pricing for your product, especially in a competitive market. And as much as you want to price your product according to the market forces, you should also make sure that it will help you maximize profit. Let your price be customer friendly so that customers will be at ease to buy, and at the same time you can make enough profit too to cover your expenses. For your business to make profit, income from the sales of products must exceed the cost of running the business, which is the expenses. So to determine profit, the cost of running your business must be analyzed and checkmated if need to be sure it isn't eating too much of your business generated revenue. You need to put in place strategies that help minimize costs while seeking avenues that will promote a good profit margin to help increase the overall profitability of your business. This is another vital area of your business that you need to strategize to have a huge volume to be able to make good profit daily. Of course, you know no sales means no profit, because profit directly comes from sales. Making sales is always a conscious effort by business, so you must employ marketable skills that will help retain new and exciting customers to patronize your business service. This will increase the percentage of repeat purchases, while also boosting new sales via recommendations, old clients' testimonials, and word of mouth. First thing is always to strive to give your customers value for their hard-earned money. Remember, the customers are always king, so treat them fairly and don't forget to infuse in the reward system as a tool to lure them always. These could be in the form of bonuses, promos, or discounts. In trying to measure the profitability ratio of a business, it is also very important to know why you're measuring your business profitability. You will need to know your profit margin to take a very professional decision concerning the expansion or growth of your business. This is the reason you have business analysts, auditors, financial advisors, and other financial experts in case you can handle the decision-making process yourself and need professional input. You can contact them for professional knowledge. You need to know if your business is making a profit, as this will influence your tax amounts and can easily be found by doing a financial audit and tax analysis report. The aim of a business is for profit maximization, and to make profits, the selling price must be higher than the total cost price, inclusive of other incurred costs of production and distribution. So measuring your profitability will give you an insight on whether to increase your product pricing to make a good profit margin or not. Not all products are profitable. Assessing or measuring your profitability level will let you know how much profit return your different products or services are generating, and thus ascertain if it is doing well or not by looking at sales increase and income generation. This will allow you to channel more efforts into profitable products than others. Measuring the profitability of your business will actually help you to know the status of your business financially, if it will stand the present financial pressure or can actually stand the test of time of the future. If you will need your business to live beyond your life, then measuring its profitability to ascertain the financial state will be helpful. Financial disaster can be averted now or in the future if one continually measures business profitability. It will nip in the bud of huge losses coming out of the way of business. Running a business is one thing, but running it effectively is the most difficult. To measure your business profitability isn't just about relying on the report of your employees, be it an accountant, a cashier, or an accounting officer. The quarterly reports might just not be enough, and sometimes there might be some mispresentation and miscalculation in the books, and as such there could be some errors which could give you a false sense of your business productivity and the profitability. To accurately measure your business profitability, you can use some measuring approach. This approach is about measuring profitability by checking that the operating expenses are still less than the income generated by the business. If there's an increase in the total amount of expenses on the balance sheet, it will be wise for you to limit such expenses as soon as possible, unless such expenses are really worth the increase. But if not, it should be cut off or brought to the barest minimum to limit it from increasing further. Of course, when expenses exceed the company's income, the business definitely will be running at a loss. To evaluate this critically, you need to look at the current assets in your balance sheet and see if the expenses are really necessary for the growth of the business. To improve the business using this approach, cut off expenses that wouldn't boost your business, but also take out time to really ascertain whatever you are cutting wouldn't starve the business of great growth and more investment. Business profitability can be measured through its income generation and actual profit made. If the business has different products on sale, then each of these products can be analyzed to know if actually the company is making a profit from each product. The essence is to detect a product with a higher volume of sales, and more production can be carried out on such a product if it is a manufacturing company, or purchase more of the products if it is a trading company. Economy scale of cost can be applied here. More products with a high propensity to excel will be produced or bought in higher volume than other products not doing well. These less performing products will be produced or purchased in small quantities or outrightly dumped to cut away such expenses incurred in trying to sell these kind of products. Another good way you can actually measure your business profitability is through analyzing your gross profit margin. You can drive your gross profit from subtracting your direct overhead costs from your cost of goods sold. This is like the profit made after deducting direct costs like direct labor or direct materials bought and other products overhead costs. Certain you are still making a profit, you can find a gross profit margin by first subtracting the cost of goods sold from sales. Then you divide sales revenue by the gross profit, then multiply by 100. So if the gross profit is about 36%, this is to say that for every dollar your business is making, there are 36 cents gross profit made that can take off the business expenses. So if gross profit is higher than the cost of the product, then profit is being made. But if it lowers, it means the cost of production is taking more of the profit. So to rectify this, you need to sell more products to cover the expenses or raise the prices of your products to be able to make a profit. This approach is to help you know how your cost of production and how much it's really taking a toll on your business. That is, if it's really eating your profit. So with a gross profit of 50% and upward, one can say the business is healthy financially, but if it's lower, then it's bad for your business. But you can as well improve your low gross profit margin by raising your prices. But you should also be careful not to annoy your customers with the new price. The increase can be done in trickles. Still better pricing is affected, or better still, you can just purchase high markup products. Using this approach to determine your business profitability is using your net profit generated to ascertain if the business is really making a profit. Net profit is the real profit of the business. This can be derived by subtracting the general business expenses from the gross profit, then divide the net profit by the sales revenue and multiply it by 100 to get a percentage. The percentage will be used to measure one's profitability. The higher the figure, the higher it shows the profit ratio. Like if the figure realized is 28%, you can conclude that 28% of total earning is the income realized after covering all expenses. To evaluate this, you could check the general expenses of one business from your balance sheet. Check to find the expenses incurred by the business that is adversely affecting your net profit. A good percentage of your net profit value should be from 50% upward, so that then the financial status of your business is healthy enough. But if the below the average marks, you can still make some adjustment to raise its value. The average net profit rate depends on the expenses of the business. These expenses can come from employing additional workers or employees, the rent and rates paid by your business, purchase of additional materials. To improve your net profit margin, you should check to remove unprofitable products, try to get new customers that will buy your product at a better rate, review your current pricing to make more sales and increase your profit, try to reduce your inventory, and check your expenses to reduce them where necessary, and lastly, try to increase your conversion rate. This is another approach you can employ in measuring the profitability of your business. This approach is about measuring your business profitability by how effectively your business uses its assets to generate sales. To derive this, you will divide your revenue or income by total assets. Your total revenue is the sales that have been brought in the whole year, while your total assets are the total of your business property, inventory, and equipment in the business. If you need to get the value of these two, you will get them from your balance sheet. If the figure realizes from the calculation is high, then the business is making a good profit. But if low, then profitability is also low. To improve your asset turnover, if it's low, is to consider boosting areas like having special promotions, putting in place some form of loyalty program to lure people, and maybe boosting your staff allowances too, to help motivate them to work more. Remember, the whole essence of asset turnover is quickly convert your assets to revenue. So you just have to use the best means at your disposal to just make your products to be out there is as quickly possible. Conclusively, to expand and grow your business is of utmost importance to always measure its profitability periodically to maintain the financial health of the business. The main measurement metric of the business is its profit. With these frequent checks, a business can be saved from falling abruptly. Again, if you need your business to have a higher profit margin, you should cut off products that are eating into profit of the business and are no longer selling. You can also change your suppliers if their offers are not favorable to your business, and there is no need buying from suppliers without products and no customers loyalty program in place. Reduce wastage and unnecessary purchases, increase the price if the need arises to make more profit, and strive to make more sales. Now that you have different approaches to measure your business profitability, try to use it almost all the time to track the state of your business accurately. The best bet is for your business to stay solvent.
Subscribe to Analytics of Life and don't forget to press the bell icon. Never miss another update or a new video.